I want to welcome the well-known author of How to Invest in Gold and Silver and the creator of goldstockdata.com. Don Durrett is a legendary gold and silver mining stock investor, and now he's big in the crypto space. So welcome, Don.
Hey, Elliot. Thanks for having me back. I think it's the second time we've done this.
It is, yeah. No, I'm excited because there's so much to talk about. And the first thing I kind of wanted to bring up was, you've been making a lot of noise on Twitter about, where you think gold and silver prices are kind of headed. Like, are we range bound? Could you kind of give us, an update on where you think we are with the gold and silver price?
Yeah. So I'm on Twitter a lot. I started doing my website full time about a year ago, so I have extra time. So I'm on Twitter a lot, and people give me a bad time for making predictions, but I'm just trying to help out. I mean, I've been doing this for 17 years, and so I have a good feel for kind of trends. I write, I do a newsletter every month, and my newsletter is very highly focused on, trends, where gold's going, the macro, because, timing is really important when you're investing in miners. You don't want to really catch a falling knife, and you want to get a good entry price. And so I try to help out. And, people are giving me a hard time right now because I'm not, super bullish that we're going to break out here for a number of reasons. Now, I'm very bullish, probably in the middle of summer onward, if you will. But I feel strongly that the risk on trade that we currently have, which when I say risk on, I basically means people are buying stocks with abandon, and they don't care about hedging that investing in the stock market. So I'm talking about the big money here, not the retail crowd, because the big money is what moves the gold price, and the gold price is what moves the silver price. So, with the stock market, I say it's been on a binge basically since November, middle of October. It's pretty much went straight up, and my feeling, been through this rodeo several times, is that when you get this type of a run, you're generally going to get a correction. So the timing is not really good for gold to break out here, because the market, I think, is overbought, and it wants to get sold. And so I'm expecting a correction in the markets. So if I'm expecting a correction in the markets, that means gold's going to get hit. And so the timing just for me isn't really great. Now, that said, it could happen. And this week, I mean, right now we're looking at, at some very significant resistance points and breakout points. You got $28 silver. The breakout is at 30, but once you get over 28, you're getting really, really close to making a run at that. And then with gold, we're looking at 1880, which we're over above today. We're 1900, and then all the way up to 1950, 1960 is the breakout. So we could break out here, but I think it's going to be a rinse and repeat, and we're going to go back down.
Yeah, it does seem to track the overall markets. Like, if there's a sell-off in the markets, gold and silver get punished just as much. The only way that wouldn't happen would be like in the 1970s, right? When the stocks crashed, bonds crashed, but gold and silver went up. And that's what a lot of gold bugs do think is on the horizon, especially with inflation picking up. But my question for you is, do you think we are kind of going to experience that out of control inflation that kind of crashes bonds? Or do you think we'll turn into Japan, where they just have this cyclical deflation stagnation perpetually?
I don't think we're going to see 5, 6, 7% inflation this year and next year. I know we had a 4% print last month, but I think we're going to stand at 5. It's my gut feeling. I think we're going to stay kind of range bound with inflation between 3 and 5, and that's for the rest of this year. I don't think we'll go under 3. I mean, it's possible, but I'm expecting to stay kind of be range bound, because we have a lot of deflationary pressure as well. We have a lot of inflationary pressure, but also deflationary pressure. We have both. So I think that's going to somewhat contain, this explosion in inflation. But some people think that, it's transitory and inflation is going to go back to 2%. I don't see us going back to 2% in the next 2 years. It's not my feeling. And so I think that the 10-year bond and the 30-year bond are both going to go higher interest rates wise. So the prices will come down. So buying bonds isn't going to be, fun for the next year. I think bonds is kind of somewhat of a dead investment, if you will, if interest rates are going higher. And so where's that money going to go? I think a lot of that money will go into gold and crypto. And when I say gold, I'm talking about silver as well and the miners as well. So I'm very bullish here for gold and silver once the risk on trade basically halts. So we have this melt up. I said we've been on a bench since middle of October. I think the melt up is ending right now. I think I'm expecting the correction in June. So we're almost there, a week away. June, July, August. I thought the window really opened in April. So you had the Biden administration come in, and I thought everybody would have a wait and see attitude on Biden. So I didn't expect any crash, in the first quarter, and we didn't have one. So the window kind of opened after everybody kind of settled in to see what Biden was going to do. And I think that Biden's economic plan is actually negative, not positive. I mean, we've seen all these advertisements for Biden saying that he's going to bring back these jobs. But the problem is those jobs are not permanent jobs, or the vast majority are not permanent jobs. All he's trying to do with these commercials is to convince voters, to convince the representatives to pass, this infrastructure bill. And most of the infrastructure jobs are temporary. Japan tried this in the early 1990s. As a matter of fact, from 1990 to 1994, they had 4 major infrastructure bills. They finally gave up because their GDP never rose. So that's why we're turning Japanese. So MMT, I think, is negative, a net negative for the economy, because it really ruins the free market. It ruins price discovery. And that makes it hard for banks to loan money because they don't know what's risky and what isn't risky. It makes it hard for businesses to invest. It's a net negative. And so for me, the horizon is very kind of ugly as far as a growth environment for the economy. So for me, the kryptonite for gold and silver is a strong economy. If the economy is growing at 2.5% or higher, that's really bad for gold and silver, because people are going, I don't need, gold's a hedge. I don't need gold. If I'm growing at 2.5 or higher, I don't need it. So me, my analysis is that the economy is weakening as we speak, and that's good for gold and silver.
Okay, so yeah, it's an interesting picture. So it's like economic stagnation, but then kind of sustained higher inflation, kind of like a stagflationary scenario is what you're looking at.
But similar, yes. But we're, kind of history rhymes, but it's not the same. So I don't think we're going to get to stagflation of the 70s where you had kind of high inflation, right? And low growth. I think we're going to get now is somewhat moderate inflation and slow growth. So it's not really stagflation per se. They'll probably come up with a new term for it. I call it muddling. We're going to muddle. Basically, we're going to be stuck in the mud. And I think, I could be completely wrong, is that we're going to become like Europe and Japan, where we just can't grow. And I remember Jeremy Grantham saying that the U.S. is kind of, and this is before we had all this big mess. I mean, this is going back a ways. But Grantham, he's one of my favorite analysts. I don't agree with him 100%, but I just think he's a really smart guy. Him and Druckenmiller, I think, are two of the smarter analysts. And he said that the U.S. economy can no longer grow at 3% because of demographics. And that resonates with me. I don't think the U.S. economy can no longer grow at 3%. Anytime we grow at 3%, I think it's transitory. It can't last. You might get 1 or 2 quarters and that's it. And then we fall back down because the demographics you have the baby boomers who their earnings power is decreasing because they're all retiring right now. And so every baby boomer that retires, that basically slows the growth of the economy. So it's like headwinds. So we have huge demographic headwinds. Simultaneous to that, the younger crowd right now, say anywhere from 20 to 30, if you will, they're on the wrong, part of history, right? It's really, they're so behind the eight ball. It's really tough for them. It's very expensive to buy a house today. It's very expensive to start a family today. So what's happening is they're delaying marriage. The average marriage age is now like 28 to 30. And so they're getting married later. So they're building houses later. And so that slows the economy too. And those are the people that are supposed to drive things, and they're not. But that's just, kind of the tip of the iceberg of some of the negativity kind of built into the economy right now. I think globalism is another one that's hurting us. And now you got COVID, you throw COVID in the middle. Even without COVID, I thought this was all going to happen. COVID just kind of reinforces the outlook of what I'm saying.
Yeah, absolutely. So you were kind of seeing a weak economy, which is going to cause kind of the fear trade and people looking for stores of value like gold and crypto, and they'll do well in that environment. So my question is, and this is why I love talking to you, because you go both ways, right? You like crypto and you like precious metals. So how does that work for you? Like, can you help explain to some skeptics of crypto, like hard asset investors cannot get their head around buying just like electrons that you can just pick up on your phone and that they're not really backed by a hard asset. So how can you justify that as an investment?
Yeah. So I was lucky in that my degree was in management information system. I've been in IT. I'm basically a tech guy. I was in IT for 20 years. So I understand tech. So when I did my analysis of Bitcoin, I understood it. Most people, they don't understand what Bitcoin really is. So they just think if you don't understand something, why invest in it? And that's kind of their mentality. I get that. So I have always been an alt investor. I went into gold and silver as an alternate to the stock market. I never invested in the stock market. My first job out of college, my first investment, number one, was a gold mutual fund, 1991. I've never invested in the stock market. I've always been an alt investor. So I went in after gold and silver. Why? It's one of the riskier sectors, period. And my belief always was I was going to go for the huge alpha, the five baggers, the 500%, 5 and 10 baggers. That's always been my focus. I'm going after the alt, the big returns. So when I did my research on Bitcoin, I'm going, this thing is a total alt investment. It's got huge upside. It's like, it fit really well into my investment philosophy. And so what people have such a hard time understanding. See, Bitcoin is hard to understand. Ethereum isn't. Ethereum is actually very simple to understand. So I'll do Ethereum first, and then we'll do Bitcoin.
Sure.
And Ethereum is when I'm explaining Ethereum applies to all of these smart contract. Your Cardanos, your Neos, your Polkadots, all these smart contracts. My explanation here is going to apply. What they are trying to do is to create a new software company that has a product that they can sell to people. It's not a scam. It's not a pyramid scheme. It's a product. Ethereum is, and again, I'm talking about all these smart contracts. It's a software platform that people can build an application on to make profit. And so, it's basically kind of a new technology that didn't exist, that just spawned from Bitcoin, basically a smart contract, which has a plethora of use cases. That's why you have all this investment. All these companies are doing it because it has so much potential. There's so much different ways to utilize a smart contract. So smart contracts are not going away. It's a total investment on a company's idea, if you will. And these are, we had this big technology wave in the early 1990s, and I was right there in the middle of it all. And you had new company after new company coming out. That's the same thing with these smart contracts. These are new company after new company coming out. But again, but how many of those companies in the 90s survived, right? Only a small percentage. And it's going to be the same with crypto. A small percentage of these companies will survive. So that's a smart contract. These are basically companies trying to create products. And there's various different ways to do products. For instance, I'll give you one example, what I mean by a product. So Cardano just made a deal with, I think it was Ethiopia, the Ethiopian government, to use Cardano to basically to collect information that something the government needed. So you can imagine. So if one government's going to use Cardano for, it's basically a kind of a decentralized database, but it's going to save them money, if you will. That's the only reason why the government wanted to do it. So you can imagine all the governments that are on the world. So Cardano is going to start with Ethiopia, and they're going to go here, here, and here. Who knows? There's so many different potentials out there. It's pretty amazing. I mean, the stuff that HBAR is doing is kind of mind-boggling. Some of the applications that they're thinking of doing, these are applications that have never been done before, ever. It's like, what? It might work, it might not work. These are kind of, entrepreneurial, product projects that are coming out, kind of like what happened in the 90s and all through the, the early, the next decade, the 2000s and onward. But that's one side of crypto. Now I said I was going to explain Bitcoin because Bitcoin is a lot harder to understand. Mm-hmm. And Bitcoin, if you don't get it, it's tough. So it's like, I just don't understand it, right? It's like, wait a minute, Bitcoin, how can Bitcoin have value when it's basically digital money made out of thin air?
Exactly, right.
When you explain it like that, it makes no sense. But when you look at it from a different perspective, it's kind of stunning. I mean, the first time I did a deep dive, my jaw dropped because I'm a tech guy and I realized that what they had created was basically built to last and built to increase in value. And that is exactly what it's done. Now, what I mean by built to last, it's basically decentralized. So there's no company behind it, none. There's no Bitcoin organization at all. And the reason why, and they're the only one that's this way, there's no Bitcoin Foundation, there's nothing. And the reason why, and they're the only one that did this. This is the reason why Bitcoin's the king. This is the reason why Bitcoin goes down, everybody goes down. This is why Bitcoin's the elephant in the room, because it's so unique. So the way that it got created was some guy with an alias called Satoshi Nakamoto. What he did was he released a white paper, and all the white paper was an explanation. It wasn't the technical details. It was just an overview of what it was going to do. It was an overview of Bitcoin. And that white paper is available. Anybody can read it. And then he wrote the software. So he wrote, according, nobody knows differently. He wrote the white paper, and then he wrote the software all by himself. And then he released the software. And all he did was basically post it. And he posted on GitHub. Back then, GitHub was like a year old. Now GitHub's huge. And so he posted the software, and it's open source. Anybody could download it. Anybody could install it. So he basically got people to download the software and start running it. And then for about a year later, he interacted with the other people that were using it, answering questions, this and that, and fixing, any changes that he thought it was necessary. And then he disappeared. He was gone. Never heard from him again. All we have is his emails. That's all we know. We have his emails. We do know that he basically was British. He wrote in British English. He wasn't an American. And the very first, we could tell by the British English. That's how he wrote. We know that he was basically a very brilliant guy because of the way that he wrote. I'm a writer, and the guy writes like 10 times as good as me. I think he was kind of a PhD type dude, very smart. Well, he had to be. I mean, he wrote the software. but he, inside the very first block that he created, was the headlines of the London Times, which coincides with his writing. So I think he was basically a guy that lived somewhere in British, which could have been Australia, could be the Asian countries, Hong Kong or England, but it was basically British English. That's pretty much all we know. And I would guess his age was somewhere between 30 and 50. That's it. That's all we got. So Bitcoin, again, so it's decentralized. So you cannot turn it off. That's number one. And it's unbelievably secure because you can't turn it off. The other thing that makes it unbelievably secure is the way that it gets modified. It's modified through a consensus mechanism. So the only way that you get enhancements done to it is if the community agrees. And that's where they do these soft forks and hard forks. And we haven't had a hard fork since, I think, 2016, 2015. Forget, it's been a long time since we've had a hard fork. And so hard forks are really, really hard to, when you have a hard fork, everybody has to switch over. And soft forks are one where you can have kind of a dual system running, waiting until the majority go over to the new fork, and then the new fork kind of takes over. Basically, one or the other will win, but it doesn't really matter which one wins. It's like, okay, we'll try this out. We'll try the soft fork out. It either works or it doesn't work, but it doesn't hurt anybody, kind of thing. So the consensus mechanism, it makes it kind of foolproof in that it's really, really difficult to basically break it. So it makes it really, really, really strong. They call it the honey badger because it's so strong and durable. And so, and the other thing is it's global. So all you need, and this is one thing that people don't understand, is that you can't turn it off. So the United States and Europe go together and say, we're going to outlaw Bitcoin. The rest of the world will go, fine, we'll use it. And so, I mean, all that will do is slow the growth of Bitcoin, but it won't kill it. In fact, if Japan all by itself said, oh, we're going to keep Bitcoin, Japan all by itself could push the price of Bitcoin, probably would be higher than it is today. All it would take is one country. And the reason why is because there's only 21 million Bitcoins. And there's probably been at least 4 million lost. So there's probably only right now 14 million out there. That's unbelievably rare when you talk about a global currency. And so what makes it valuable is twofold. One is its security model, two is its trust, and three is its rarity. So when you combine those three things, it has inherent value. Because, and there's one other thing, and remember I said it's very complicated, it's kind of really hard to understand because you have to connect all these dots. Yep. The other dot you have to connect is this so-called halving process. And the halving process is the very reason why I bought it. Now, do you know what the halving process is?
I know the supply goes down. That's mineable, right?
Yes. Yep. So the halving process is every 4 years, the mining supply cuts in half, a 50% drop. That's amazing. So every 4 years, all Bitcoin has to do is survive because every 4 years, the supply drops in half, which is stunning. So I say that Satoshi actually tried to create a cryptocurrency, but he failed because nobody's going to spend it because the halving process is so powerful and he couldn't predict. He just wanted it to survive. He couldn't predict that the halving process would have such a huge impact. And so what he created was a collectible. So what you do if you invest in Bitcoin is you invest. You do not spend your Bitcoin. I will never spend my Bitcoin. It's basically a collectible. You buy your Bitcoin and you hold it. They call it hodling. The reason why they call it hodling is some guy misspelled the word hold. But in the early days, somebody said, "Are you going to spend your Bitcoin?" And he said, "No, I'm going to hold it." And he put HODL, hodl. On accident. No, I'm not gonna. I'm gonna hold it. I'm gonna hodl it. And people started laughing. Oh, he's gonna hodl, and it caught on. And that's exactly what you do with Bitcoin. You hold it because it's too valuable to spend. And this is what people miss. All these people on Wall Street, all these, the Peter Schiffs of the world, they think that this thing has zero value and it's a total scam. But what they don't realize is that it's a software technology that's built to last, and it's basically a collectible. And so it's a smart investment. In theory, it's a smart investment. So far, it's been a smart investment. So far, all it's done is gone higher. Yes, it's unbelievably volatile. And the reason why it's volatile is because it's really hard to understand.
Right.
Like, it's really hard to understand. So people basically, they don't hold on to it really tight. I mean, most of the people are speculating the heck out of this thing because of that reason. It's like, why does this thing have value? And so the people that kind of get it, if you will, the hodlers, they can't keep the price up. It's the speculators are going to make that price just go all over the place. That's just the way that Bitcoin works. But if the hodlers are right, in the end, it's just going to continue to trend higher and higher, which was my bet from day one, and it's worked out well. And I have some predictions around it. I could be completely wrong. I mean, in theory, see, the Bitcoin actually has a few weaknesses. The weakness number one, and they call them Bitcoin maximalists. We disagree completely, and I've been arguing with them from when Bitcoin was, Ethereum was at $100, and they were calling Bitcoin a scam coin. I'm going, you just don't understand what Ethereum is, and here they understand Bitcoin inside and out, and they won't buy any of the altcoins that they call. I don't think Ethereum is an altcoin. They wouldn't touch them, and all they would do is basically call it a scam coin, going to zero, all this stuff. But what they miss is that Bitcoin is really a one-trick pony because Satoshi didn't create a cryptocurrency. They think that Bitcoin is going to be a transactional currency. And I say it's never going to be a transactional currency because it's too valuable. Best case for Bitcoin is it'll be the foundation of another cryptocurrency that's used, like some type of a stable coin or whatever. But Bitcoin itself, I don't think will ever be a transactional currency. So it's basically a one-trick pony in that all it is supply and demand for a rarity. So it's basically a collectible. That's what gives it value. So from that perspective, it has a ceiling. It's like a Van Gogh or a Gretzky rookie card. At a certain point, it'll reach its nadir, it'll reach its peak, and then it'll come down, right?
Right.
We don't know what that ceiling is, but eventually it's going to have one. It's going to have a ceiling. I don't know when. So Bitcoin has a lifetime, if you will. Ethereum doesn't. Ethereum, it's going to last as long as it has products on its platform. So Ethereum, in theory, doesn't have a ceiling, and it could last. It's more like a Google, right? It's a company. Bitcoin is really based on supply and demand, and I think has a ceiling. I don't know what it is. My feeling is that if Bitcoin gets to a market cap of 2 to 3 trillion, then the whole dynamic of Bitcoin changes. If it's right now, it's under 1 trillion. It did get to 1, but it's backed off. If it gets to 2 to 3 trillion at that point in time, again, the dynamic changes for Bitcoin. At that point in time, I think it does become a store of value, and I think it does compete with gold as the best store of value. At that point in time, I think central banks will consider it as an asset. I think at that point in time, it starts becoming a foundation for other cryptocurrencies to become transactional. The whole dynamic of Bitcoin starts to change at 2 to 3 trillion, and I don't think people realize this. And I've said that I thought for sure that Bitcoin would get back above 20,000, and once it got over 20,000, that's when the institutional money would come in. But the real hard part was going to be getting the institutional money to basically decide that it was on board. That you were always going to get this time period where the institutional money basically dipped their toes into the water. That's what we're experiencing today. But once Bitcoin gets to like 75 or 100,000, I think it'll become entrenched. And once it becomes entrenched, then it's probably not going anywhere. Then we start looking at the ceiling, and then you start looking at a 2, 3, 4, 5 year horizon for Bitcoin. And so this is the reason why I got into crypto. This is the reason why I buy the smart contract money. I think that it has a future, and everything. If you know, I mean, if you start adding up the risk rewards, it makes sense. I could be completely wrong. One thing I say about crypto is only invest what you can afford to lose, because we don't know if all this stuff's going to fall flat on its face. But as far as I'm concerned, I think I don't expect that, but you have to be very, very careful. For instance, my investment allocation is actually very low for crypto versus gold and silver, because I've never been, never not recognized the risk involved. Bitcoin, if Bitcoin goes under 20,000, I mean, it could go back down to 10,000 in a heartbeat and get stuck there for 2 years.
Right. Yeah. So for all the hard asset investors out there that look at it and say, I'd rather have a few ounces of silver, right? Because it's like tangible, it's a needed commodity. Well, this is collectible value. And then things like Ethereum and smart contracts have utility. And it's like kind of like buying like a piece of the internet, right? Because people are building on top of it. And they actually cash flow, right? With the fees, with the gas fees and everything.
Oh man, it's a great point.
Yeah.
Well, if you, this is something that people are really underestimating, is that you can buy these cryptos and stake them and get paid interest much higher than putting money in a bank. I right now have staked Ethereum, and I'm getting paid 5 or 6% on my money.
Right.
So that's much better than having some money in the bank. Yeah, and I'm probably going to stake something called ICP, and you can stake it anywhere from 5% to 10%. So yeah, and Bitcoin is probably going to be staked. I don't know if it'd be staked, but you'll be able to do DeFi, decentralized finance, where you lock up your Bitcoin and get paid in interest. But all this crypto could turn into, like interest bearing money. I mean, yeah, it's high risk, but it's like high junk bonds, if you will.
Yep.
But yeah, yes, indeed, you can get interest on your investment in crypto as well. Some people, say it's just too risky. Yes, it's high risk, no doubt. Junk bonds, all day long, junk bonds. But the one thing that also people need to recognize is that the millennials love this stuff. They like being involved in it. They like working for companies that are doing it. They like, investing in it. This is the up and coming generation that's going to acquire all of the boomer money. So, they're going to support this stuff. So is it really just going to crash and burn? I mean, maybe, but right now I'm kind of glad I'm involved in it. I'll tell you one thing, my small percentage of investment in crypto, in the end might have more upside than my gold and silver, potentially. I don't know which one's going to perform better, but in theory, they might even perform better.
Yeah, it may. So yeah, you've obviously studied the space a lot, and there's a whole bunch of noise and different coins out there. So if you don't mind, can I just run through a few of them, and you can just tell me what you think?
Sure.
First one is Dogecoin, which is an Elon Musk community token now. Elon Musk has his resources. He's going to try to develop it. He's going to try to create the cash of the world. Obviously, there's a lot of competitors for that, but he's going to put his weight behind it, right? He's adopted it. So
Right.
does that excite you at all as a potential investment?
No, although I do think if Elon continues to push it, I think it will probably survive. He will get it ingrained, if you will, and he will get it to survive. But the problem with Dogecoin is that it's basically a clone of Bitcoin, but yet it doesn't have the security model of Bitcoin. And so you're never going to get, any institutional money into Dogecoin. And the other problem with Dogecoin is that it's an inflationary coin, where Bitcoin is a deflationary coin. In other words, Bitcoin gets smaller every 4 years. The mining supply decreases by 50%. Dogecoin is it increases like by 10 billion tokens every day. I think I might be a little high. It's either 10 million or 10 billion tokens every day, but it's inflationary, and so it's not built really to increase in value. Although I think it probably from here will probably again only invest what you can afford to lose. It'll probably go up 2x, 3x from here. But I don't see Dogecoin being a 10x coin because it's not really built to go up in value because it's inflationary. The way that they mine the tokens, tokens just getting bigger and bigger and growing bigger and bigger.
Yeah.
I think it has, oh gosh, I forget, like 400 trillion tokens or something. It's unbelievable. No, that's the Doge's, the other one. I think it has like 400 billion. I don't think it has a trillion. But there's a Chinooga, whatever that dog is. They named it. Yeah, there you go. They came up with another token that's got 400 trillion. It's a joke on top of a joke. So Dogecoin was created for fun. We'll create an inflationary token. Nobody's ever going to want to use this. And then somebody goes, okay, we'll just make one even bigger. Yeah. So, it was created in fun. It really was. And now it's probably going to last. I mean, in theory, Dogecoin might stick around as a transactional currency. I mean, it would be ironic, that, Satoshi was trying to create a transactional currency, but he ended up creating a collectible. And now this Dogecoin is going to end up being our transactional currency. But the problem with it is that I don't know if Dogecoin will ever be secure enough to be a transactional currency. It's possible, but it doesn't have the real strong decentralized nature. For instance, the only way that Dogecoin really will get improved, upgraded, developed, if you will, is if some type of a foundation evolves, and I wouldn't be surprised if Elon's involved in some regard, and that's not decentralization. So, there's my right. Overview of Dogecoin.
Fair enough. Yeah, I mean, unless Elon can somehow engineer it to be like a much better token than it is now, I think that's why people are buying it. So, great. So then, my subscribers are going to be pissed with me if I don't ask you just about Bitcoin SV. Have you heard about it, thought about it, looked into it at all?
Oh yeah, of course. So you got Bitcoin SV, which is Bitcoin Satoshi's Vision. SV stands for Satoshi's Vision.
Yep.
And then you have Bitcoin Cash, which is BCH. Now, both of these were the two hard forks that I talked about. I think it was in 2016. The last two hard forks that we had off of Bitcoin, significant hard forks, where you had contention on who was going to be Bitcoin. I mean, Bitcoin Cash actually tried to become the new Bitcoin. And then Bitcoin SV, they forked off of Bitcoin Cash, claiming that they were really Satoshi's Vision. Now, both of these coins, the reason why they basically forked off of Bitcoin was the battle over the size of the block. So the development crowd, you had this, they were arguing through emails basically, which way to go for scalability. And the devs who eventually won, the majority of the devs, that's who develop additions to Bitcoin through a consensus, but the overall majority of the development community, they wanted to keep the block small because it created a higher security. Because if you have smaller blocks, it makes it much more difficult to basically attack, and it also makes it easier. If you have small blocks, it makes it easier to have a node. So you have more nodes, and more nodes make more decentralization, and they're spot on. So the smaller the blocks makes more security, more decentralization. But the guys with the higher blocks, they didn't want to have off-chain scaling. So in order to have, if you're going to use small blocks, then you have to have off-chain, which is called the Lightning Network. And they thought that was going to be the end of Bitcoin because Satoshi didn't want to have off-chains. So that's where Satoshi's vision came from. So both Bitcoin Cash and Satoshi's vision, ironically, Satoshi's vision is a bigger block than Bitcoin Cash. So Bitcoin Cash came out with a bigger block. I think their blocks are either 4 megabytes or 16 megabytes, I forget. And then Satoshi Vision said, you're not big enough. We're going to be, we want them bigger. So they split off and create even bigger blocks. And so they think that the bigger blocks is the way you solve the scaling problem. But the problem with bigger blocks is you open yourself up to both security issues. It's easier to attack the bigger blocks, and you're going to have not as many nodes because it costs more money to have these big, blockchains and bigger blocks. And so both of these have problems. They basically compete with Dogecoin as a transactional currency, and they compete with Litecoin and the Monero as transactional currencies. They're not smart chain. They're basically trying to do faster transactions. So they both might survive, possibly, but the problem is the weakness with them. This is my opinion. The weaknesses with them is the decentralization and the security, which are huge. So the decentralization is that, who's deciding how these products get upgraded? How decentralized are they? Who really controls the next iteration, if it is? And then, of course, you got the security model as well. And it's going to be hard for either of those to overcome that. So that's my feeling about it. And that's why, I'm basically bearish on both of them, and kind of bearish on Dogecoin as well.
Okay. I'm not in the weeds enough to debate you on that at all. So, but the one fun fact I'll say is a lot of the Bitcoin SV people believe that Craig Wright is Satoshi, and he does fit the mold almost perfectly of what you described. He's English, he has many PhDs, and he's in his 50s. He's in court currently fighting for the copyright to the Satoshi white paper, which would be
right. Well, there's 2 problems with that argument. The first argument, which I think ends it from point 1, is, and let me answer it this way. If you compare Craig, his public persona, to the emails that were written by Satoshi, because you can get a feel for someone's personality by the way that they do emails, right?
Yep.
If you read Satoshi's emails, there's no way, in my opinion, that Satoshi's personality matches Craig Wright's personality. That's my personal feeling. It's just apples and oranges. The guy that wrote those emails was basically a kind of professorial type of very down to earth kind of, I don't know the right way. There's lots of different professors out there, right? So I'm trying to, generalize here. But when I read those emails, that's for me not Craig Wright's personality. It just doesn't seem to. It's apples and oranges to me. That's number one. And number 2 is, I think it would be so simple for him to prove that it was him. For instance, the drafts. If he wrote me, when I write something, I have 10, 20 drafts, right? He would have all these drafts of the white paper, right?
Right.
It would be that's just one example. He would have emails that he could prove that he wrote. It would be so easy for him to prove it, in my opinion. It just doesn't hold up to Occam's razor at all.
I'll give you that. And well, just thank you so much for weighing in on that, because, I think most people actually agree with you, but then a lot of people disagree, and there's this big debate. But thank you for sharing your opinion, even though.
I just want to follow with the one final thought, is that there are people from the very beginning of when Bitcoin did the Sedgwick hard fork. There were people there at the very beginning that disagreed with the devs with the small blocks. That contingency kind of followed Craig Wright. They followed Roger Ver and then into his Bitcoin Cash. And then then they disagreed with Ver and they followed Craig Wright into Satoshi's vision. it's a lot. It's, a lot of people basically went down that road with him. So in many respects, Craig Wright got the coattails of the people that were against the devs back when they did Sedgwick, because Sedgwick was very controversial, because what Sedgwick did was it allowed for a second chain, and everybody thought that was bad. That's basically going to destroy what Satoshi had in mind. Mm-hmm. So Craig Wright was the beneficiary of the split. He basically is behind Satoshi's vision, but he's basically the leader of a contingent that was all against Sedgwick. That's my final thought on that.
Yeah, no, well, thanks for sharing that. And there's a vocal group which may comment angrily, but thank you for sharing your opinion. And again, a lot of people, the majority agrees with you. So there's that. Just two other things I wanted to ask you about. So Internet Computer ICP, I think it's really interesting because it's backed by Andreessen Horowitz, which is like the kingpin of Silicon Valley. They've invested in all the huge companies. If they're behind it, they can introduce it to the other huge companies they've invested in and just have a lot of weight. So why are you excited about Internet Computer?
So it's the first time I've been excited about a project since Bitcoin, the very first one. I wasn't really excited about Ethereum until it evolved, if you will. I didn't get into Ethereum until $200. So finally at 200, I said, okay, I bought it at 200. And so I wasn't excited about it. Finally, I decided, okay, Ethereum knows what they're doing. I'm getting in. And so ICP is really the first one that I did a research on it, and I said, wow, this is pretty amazing what they're trying to do. Now, the one thing about ICP is that the cryptocurrency purists hate it. And they think that, and it's not decentralized in the slightest degree. As a matter of fact, it's basically a company like Google, one company trying to kind of take over a big chunk, if you will, of the internet. In some regards, it's kind of nasty when you think in terms of the centralization aspects of it. It's nasty. But I don't look at it that way. I look at it as a business. I look at it as I'm investing in an early Google, early Apple. Yeah, it's centralized because it's a business. Any business is going to be centralized. But what they're trying to accomplish is nothing short of basically a new internet, if you will.
Right.
They want to redo how the internet works. And it was kind of inevitable that somebody would try this. Now, the thing that was interesting is that they've been doing R&D since 2016. It's kind of interesting. That's when I did my deep dive on Bitcoin, 2016. They've had $1 billion of funding. Now, how do you get $1 billion of funding? That's a lot of money. Why? Because there's potential, right? Huge potential to kind of redo how the internet works. Now, think about how the internet has evolved. The internet has evolved where you have these titans who basically control it, right? Right now, if you want to deploy a web page, you have to basically pay one of the titans. You got to either deploy it on, most people deploy it on Google's AWS, but you got to find some cloud or somebody to host your website. You got to pay them a monthly fee, right? So you got these titans up there that are basically, you got your Amazon, then you got your Google. Those are the two big clouds. Then you got also you have Microsoft in the cloud with Azure, and I think even Oracle has some cloud foot. But you have these big, behemoths who are basically controlling it all. What this is trying to do is basically take away some of their mojo. Wants to compete directly with them. So right now, if you have an application, the only way that you can basically deploy it is through either the Apple Store or Google Play. And look at all these companies that are getting, and then they take a slice of you, right? So right now, our developers are kind of really upset with Apple because Apple's kind of dictating, how much money they get paid and everything that goes goes through the Apple Store. They get a slice of it. Nobody can deploy an app directly onto the internet. Now, isn't that interesting?
Yeah.
Isn't it? Right?
Yep.
ICP basically said, why is it this way? How come nobody can basically deploy an application directly to the internet? Now, the irony of this is that they're talking out both sides of their mouth. So ICP is basically creating a way that you can basically buy a token. You buy a token, the ICP token, and it'll buy you basically cycles, and then you can run it on these decentralized cloud servers, right? But that all those servers are basically under the foundation of Dfinity. So Dfinity is basically Big Brother over the whole thing.
Right.
So and the other thing is nasty is that the only way that you can use it, so you have it's two parts. One is deploying, so you can deploy permissionless, right? But you can't use it permissionless. So and that's the nasty part. So if you want to use one of those applications, you have to create an identity, an internet identity, in order to get access to that application. It's like you have to have, basically you have to join Google or whatever, or, have an Apple ID to get onto Apple, right? To get an application out of the Apple store, you have to have an Apple ID, right?
Yep.
So even if it's free, you still have to have an Apple ID. It's the same way with ICP. You have to have what they were calling an internet identity. Well, the danger, and this is where people are going to, this thing is going to be talked to high heaven. The danger is that they are now Big Brother over your identity. Let's say that this works and that there's tons of applications on this internet computer, right? And there will be.
Yep.
And your identity is tied to all of them. What if they cut you off?
Exactly. Yeah.
Yeah, it's dangerous. It's very dangerous. And they're playing with fire here. But I got in because it was early. And the other thing I liked about it is somebody's got to compete against Google. Somebody's got to compete against Google, right? Somebody's got to compete against these cloud companies. Yeah. And in theory, you should be able to run an application on the internet without having, to ask permission, or you should be able to go directly to that company and basically, okay, I bought your app and now I run it. But that's not how it works. And so that's what they're trying to overcome. And so, I'm kind of, I have misgivings about, kind of what some of the danger zone here. And some people are not going to touch it with a 10-foot pole, this ICP. But if it works, the thing's going to be worth a lot of money.
Right. Even though it could, they're trying to compete with the Amazons and the Googles because they want to be centralized, but they could be the Big Brother over everything and kind of defeat the purpose.
Right.
Yeah.
One thing I see is I don't see them displacing Microsoft and Google. I see them competing with them.
And that's good. Yeah.
And that's good. And it's just, they're going to have to, and I think they're going to be forced to, is that they're going to be forced to not turn people that internet identity that gets created, they're not going to be able to turn that thing off. I don't care who you are, right?
Right.
They're not going to be able to turn it off. That's going to be the tricky part, is that who controls that internet identity kind of thing. And then it comes down to censorship. Is the government going to turn it off? Yeah, but I think that's at least a decade down the road. I'll be gone.
Yeah.
Who knows? It's not going to happen. That's not going to happen for a while.
Right, I got you.
In the meantime, I'm going to go ahead and I'm going to let it ride and see how it performs, because I think it has huge potential.
One other thing I wanted to ask you about, and I sent you something on it. It's Decentraland. To me, it could be like it's a metaverse, right? And to me, it could be just the future of social media, like buying Facebook early. I think its market cap right now is like under $1 billion. What do you think of it? Could it have potential? Just your thoughts on the metaverse and Decentraland.
I'm glad you sent it to me, and I'm glad I get a weigh in here. This is where people are really missing the boat on crypto, big time. Decentraland is basically, I don't think Decentraland is, in my opinion, it has potential. It could work. There's no doubt about it. But I think that Decentraland, the concept of Decentraland, which is a virtual reality, it's a virtual, the ability to create a virtual reality on blockchains, if you will, on the Ethereum is huge. It's so massive. Right now, you have, let me explain because people don't know what Decentraland is. It's a virtual reality where you can buy tokens. You can basically take your money like Disneyland. It's like a virtual Disneyland, but it can be a virtual Disneyland that people can build on themselves. They can build instead of like Disneyland right now is one company, right? Well, think in terms of Disneyland. In Decentraland, you can actually buy land. You can build a business, a virtual business there. It's like a city. It's basically creating a city out of nothing. And then you can take your money, you can take your tokens in there and you can spend them. You can buy a house, you can buy land, you can buy tokens to spend in a virtual casino. You can buy things to basically NFTs. You could buy money to basically watch entertainment, music, anything you can think of. It's basically a virtual community run on the Ethereum network. This concept is not going away. This concept is going to expand. Can you imagine? People are going to be living inside these virtual communities. Remember that one movie, and I really enjoyed it. That one about the guy that had what was it called? One something. Do you remember the name of it? The virtual.
Oh yeah, Ready Player One.
Yeah, Ready Player. Thank you, Elliot, because I forgot. The only thing I can think of was one. Ready Player One. That is basically coming to the internet. It's coming. Decentraland is the beginning of that. Now, I don't think Decentraland, I looked at it, I don't think it's going to succeed because it might, I could be completely wrong, but I just don't think it has the money behind it, the backing. Whoever builds Ready Player One is going to have a lot of money behind it. It's going to be like $1 billion. Mm-hmm. I think to see Decentraland is like kind of, it's just, they just don't have enough funding behind it. Someone's going to leapfrog them big time.
Yeah, that's the huge risk.
And Ready Player One's coming. It's coming, and it's going to be on crypto. It's going to be on crypto, and it's going to be massive. It could be ICP. Who knows? ICP has, the speed behind it to make a virtual reality system real. ICP is basically built for a virtual community, I think. So, I mean, I wouldn't be surprised if the first big application in ICP is a virtual community. It's coming. Some type of a Decentraland is coming, but I'm glad you brought it up. I think people are really kind of underestimating how Bitcoin has spawned all these technologies. Bitcoin, it spawned the smart contracts. It spawned decentralized finance. It spawned ICP. It spawned all this stuff. It spawned, Decentraland, these virtual communities, and it's just going to keep going and going and going.
Yep, absolutely. And I see these metaverses as kind of like the first generation of the matrix that everyone plugs into and just lives in a puddle of goo. But it's the first generation of that.
You are so spot on. That's the ultimate path it's going down. We're talking 50 years from now. Yeah. That's where it's going.
Yeah. No, I can actually see it, right? It's like, why not just live in the virtual world?
That's my favorite movie of all time. And perhaps that's why, is because they basically tapped into basically a semblance of where we're going.
Right. Why not just live instead of paying for a $3,000 apartment, just get in a little pod and then live in the virtual world.
Yeah.
It's really funny. But well, anyway, yeah, it's definitely the Wild West out there. And like, that's why I really appreciate you coming on and helping people and teaching them and weighing in on some of these controversial topics. Some people won't even mention Bitcoin SV, but thanks for sharing your opinion on that and everything else.
Yeah. Hey, thanks for having me on, Elliot. It was a pleasure.
Yeah, no problem. And just so people know, where can they go to learn more from you?
Yeah, let me do a plug or two. So first of all, my website, goldstockdata.com. If you own any gold or silver mining stocks, my website it's an excellent resource.
It is, yeah.
if the best thing about it is just monitoring the stocks you own. It's very powerful for that. And then if you don't own any gold and silver mining stocks, but you're interested in it, or if you do, read my book. Go to Amazon. It's just search Don Durrett and look for my gold and silver book. And it's basically a textbook, a how-to on how to invest in gold and silver mining stocks. So those are my 2 plugs, Elliot. Thanks.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.